Greetings and good day. I hope you're doing great. I'm here with you for the daily analysis of the USDJPY currency pair on February 18th. We are currently reviewing the daily time frame. As you can see, the price of this currency pair was in an uptrend, but after reaching the 159.45 range, we encountered support from the Japanese yen, and the price of this pair quickly dropped. A strong factor that led many investors to support the Japanese yen was the verbal intervention by Japanese officials after the price once again reached this range. Investors anticipated that the authorities would support this asset, and this expectation caused a sharp decline in the price of this currency pair. Subsequently, we once again witnessed a weakening of the yen and strengthening of the dollar. However, after the elections related to the Japanese government last week, the Japanese yen regained strength and bounced from the weekly and daily BPR zone below the wick. In the same way, by analyzing the chart of various currency strengths, we can see that over the past month, the Japanese yen has been significantly stronger than the US dollar. And as we continue by examining the weekly chart, after the release of economic news related to the United States, the US dollar also gained strength. And as you can see on the chart, this price decline came to a halt. Now, since the beginning of the week, we have witnessed an upward movement, and we can see that so far the price has grown by about 0.75%. Yesterday, with the fluctuations in price, it reacted to the 50% line of the daily BPR zone and closed as a pin bar candle. And today, with the weakening of the yen against the dollar, we saw an upward movement. We are currently analyzing the 4-hour time frame. The price of this currency pair has been fluctuating within a specific range from last week until now, between $152.59 and $153.96, and no candle has closed outside of this range yet. Eventually, with yesterday's fluctuation, the price filled and validated the 4-hour FBG that existed in the price range of $152.91 and started an upward movement. This initiated upward movement has not yet managed to create a change in the structure. We are currently reviewing the economic calendar. You can see that this week there have been no economic news releases for the Japanese yen, but the most important economic news for the dollar will be on Friday, February 20th, including the GDP and PMI reports. The results released from these two news reports, as well as the subsequent policies of the Federal Reserve regarding interest rate decisions, can determine the movement direction of this currency pair. We are currently on the 1-hour time frame. The range that was mentioned in which the price is fluctuating can be clearly seen in this time frame. In such a situation, if a strong catalyst or significant news event can provide good direction to the price, we can enter a trade by collecting external liquidity and target internal liquidity as our objective. Here we can see that after collecting liquidity from its own identical order queues, the price reacted to it and moved downward. Again, in this area, it collected the liquidity from the FBG zone and then reversed, moving upward. At the moment, we need to observe the price's reaction to its previous order queue. With a strong breakout occurring above this key level, and with a candle clearly closing above it, a notable market structure shift takes place. At this point, we can expect a move toward higher targets. However, if the price is unable to close above its previous order queue, or if it somehow sweeps the area above its previous order queue and then returns downward, we can consider the AMD setup. In this setup, the price forms a trading range during the Asian session, and, in the London session, collects the buy-side liquidity from its previous session. Now, if after the liquidity has been successfully swept and collected, the price reverses back into the heart of the Asian session range. It is highly probable that we can anticipate, with the official start of the New York session, a distribution phase followed by a sustained bearish move toward the downside. Wishing you success and profits.